What is going on, guys? It's Izzy here back at it again with some more market information, some more market concepts you need to know. Today, I'm going to be showing you all the concept of premium and discount. If you just sit here and blow past this concept, I guarantee you your probability of winning will be much lower. Many traders will skip over this part because it is very boring and they just want a straight setup, give me an indicator, this and that, and buy, sell. No. There's many different factors that go into a trade, and I think premium and discount is a key factor to a trade. Now, what is premium and discount? This is a pretty self-explanatory question, but I'll dig a little deeper for you guys. Premium is when price is above the price of interested buyers, and discount is vice versa. Now, how do you put it on a chart? So we're on the daily chart of the NASDAQ, the triple Qs, and you see this relative range we're in, right? Let's just mark the bottom and top of this range, all right? Bottom right here, and we have a top right here. Now, in the middle of that is equilibrium. This isn't perfectly equilibrium, but you get the concept. Above equilibrium of the relative range is premium. And below equilibrium of the relative range is discount. Wrote that out for you guys right there. As you can see up here, this half is premium, this half is discount. Now, what does this tell us and how can we use it to frame trades? So if you're going into a market, you're going to want to sell in a premium and buy in a discount. And what do you see happening? Selling at a premium, buying at a discount. And the market is doing this all day, every day, just going from premium to discount, to premium to discount, to premium to discount. Now, how do we use this to frame a trade? Okay, since we're looking at the daily chart here, this would be for probably swing trading or just getting your daily bias. Let's just say we were hopping into the market like this. Impulse move, we got our range, premium and discount. We are currently in premium. We see lots of selling pressure in premium. We are also seeing displacement with fair value gaps and those fair value gaps being used towards that side. So that could give us a daily bias that this market is currently being sold in this premium market. Now, what could we do with that? That could give our bias to sell into a discount market. And one key thing to this is to watch the reaction of the price, not to try to predict. Because we could have all said and noticed that this was in a premium market relative to the range. But what really showed that we were going to go to discount was displacement with fair value gaps and the use of them towards the downside and continuous manipulation and bearish continuation into a discounted market. And now that we're in a discounted market, what did you see? You saw that the market started getting bought up. Now, this is why you got to wait for the market to react. Because premium and discount isn't 100% guaranteed, but it is a concept that frames most of these trades. And now that we see market buying up in a discount, displacing up, we could say that the market's being bought up in a discount. Now what would you do? You would buy into a premium market and sell at a premium market. Buy at a discount, sell at a premium. You see how that's forming just everywhere? Buy at a discount, sell at a premium. Buy at a discount, sell at a premium. This wasn't really a discount because you're not always going to get a discount. And discount is not always going to work. But it is the concept that if there are buyers at discount willing to buy, we should see premium prices. And same with if there's sellers willing to sell at a premium, we should see discount prices. So can you guys see now that how looking at the market relative to its current range at a premium and discount can further give you a daily bias? It can frame your trades and give you overall confidence in your trading. Now let's dig a little deeper. There's certain key levels you can look for. So you're going to take your fib, you're going to go to that low of the range, you're going to take it, and then you're going to pull it to the high. And there are certain key levels inside of this zone called the golden pocket. It is the 62 to 78% retrace. This is the ideal pocket for positioning in premium and discount range markets. So if you want to buy at a discount, your golden pocket ideal placement would be in this area right here. Now let's do the opposite over here with this range. Let's take the fib. Let's go from this high to this low. And what do you see here? Right inside the golden pocket area, sellers come in. Now this isn't always going to work, but it is a very high point of interest. And using this combined with premium and discount can further higher your probability of your trade. If you see what I'm saying here. Let's just take this off the chart for a second. If I can. All right, so now let's just restart real quick and say you're hopping in the market right here. You see the relative range, premium, discount. You see the selling at a premium, we're in a discount. You see that we're buying up in a discount. Now you pull out your fib. Bam, bam. And look at that, golden pocket on the daily. You could have waited until golden pocket retracements, got in some swings, put stops under lows, because this is not always going to work. I'm going to say that again. This is not always going to work. It just higher your probability. Because if market is bullish, what are we going to do in a discount market? Buy. So you're saying you have your longs, you're just holding. And now you're like, well, where do I exit? Above a old high. So you buy at a discount, goes into premium, you sell at that high. And then what do? You wait for market to react. You see we're in premium, right? Let's take this fib off. Let's just say we're entering the market over here now. It's been a couple weeks. Market's changed. Now we take this to the top to the bottom. And now after we're out of our longs, what do we see? We're in the golden pocket retracement. Now you could have positioned yourself in put swings with stops above that high because it's not always going to work. Eventually the range will be broken. And from here, what do you target? Liquidity inside a discounted market. And in this case, it was inside a fair value gap inside discount. Okay, now let's hop into some lower time frame examples. Kind of used this a little bit in my last video, but that's only because it is so great at explaining this. So I started off here, right? Saw that we were having an impulse move, fair value gap, got in here. Hourly fair value gap just was going to see if it was going to hold and be bullish and keep running up. And it did. All right. And then we formed this range right here. Let's pull out that fib. All right. And now going into the next trading day, we start selling off at a premium. All right. We go into discount. We buy back up a little bit into premium, right? Should be sellers somewhere around here. All right. Okay, let's take the fib and see this one. We didn't even touch equilibrium on that one. You see how I mean when I say it's not always going to go to the golden pocket? Half of the time, it doesn't even go to equilibrium. And this is due to other factors in the market. As you can see here, there's a fair value gap here, hourly fair value gap. The same thing that happened over here, as I noticed. Got in shorts here on a premium market inside of fair value gap. And what are we targeting? Liquidity inside discount. I was ultimately targeting below this low inside this gap. And we got a few ticks into there. And this is why I say you got to wait for the market to react. See, if you were just waiting to hold all the way down to like 50% gap fill right here, all the way down to these lows, and didn't watch how the market reacted from these levels, you'd be screwed. Because what do you see here? Market reacting to this level. at a discount. We are manipulating lows in a discount. So what should we see? We should see bullishness to some point of liquidity to the upside. And what do we see? We see this high get taken inside of a premium market and we sell off again. And what do you see? Markets still buying up in this discount. So that should tell you that we are going to see another high. And what do you see? We go break that high. And then the market just keeps doing this over and over and over until ultimately we take the higher time frame liquidity above this high and above the weekly gap inside an extreme premium relative to the daily. As you can see here. See this gap right here? The weekly gap, daily gap. We're inside extreme premium. And you see sellers take that. You see the market react to it strong. And what do you see? Sell off. And where was that to? Some point of liquidity. Everything is about liquidity. Where did we go to? Another weekly fair value gap. You see how all these concepts tie together? How once you understand all of them, not even all of them, just the main simple few that help you see through the markets. So to conclude, what is premium and discount? Premium and discount are the prices the buyers and sellers aren't willing to buy and sell at given the current range. Now, what can you use this for? You can use it to give yourself daily bias, frame your trades, and give yourself confidence on your trade. And how do you use this to your advantage? Well, if you see markets manipulating discounted prices and buying up discounted prices, what should happen? We should at least see premium. And if it continues, highs and other liquidity above highs, and vice versa in a premium market with lows and selling. And what are the key levels to look for? Equilibrium and the golden pocket retracement. These are going to be key levels to look for manipulation occurring and for ideal entries. Let me know if y'all learned anything. Let me know if y'all learned anything from this, anything I should improve on. And until next time, I'm on the charts.